Hello traders, Gary Wagner for Trending Markets just before 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, 16th day of February 2016. We are looking at a Dow Jones Industrial Average back on a rampage, moving to the upside, but moving to the upside with crude oil moving down. That disconnect to me is of critical importance, because with oil having been under so much pressure, dragging the equities markets down, at some point, if oil continues to falter or remain in these low prices, which I believe it will, we need to see the equities markets kind of disconnect from that. We do have the Dow Jones Industrial Average. Looks like it's going to close up about 200 points on the day, 16,180. We've seen it trade to a low of 16,012. And we've seen it trade to a high of 16,194. So we're just about 20 points off the high. And as I said, the interesting thing is that it is happening in light of crude oil, which is faltering again today. Now, crude oil is off about 8%, down 29 cents, but more importantly, it is once again below $30. You can see the pressure here. When we look at our monthly chart, it has had consistent month after month after month, making a lower low. We've seen it an inside month here. This was October, of course, of last year. And this month, we've seen a matching low almost to the prior month. We had 25.84, somewhere around there last month. This month, it's a little bit higher at around 26.02. So you're talking about a 20-cent difference. Let's go ahead and blow this up. But you're talking about a 20-cent difference in terms of the low that we're looking at. When you consider that they're all pretty much equal lows. Now, the key is that we haven't seen these lows really since, 2003. And you can really see that when we pull up the monthly chart and compress it a bit. Of course, back the last century, 1999, we did have the market trading much lower, but I don't think we're going to see $10 a barrel oil again. But I do believe that we could still see some continued pressure in this market. These lows that come in right in here are the lows that came in at around 2001. We've certainly not matched those, and those do come in below $20. It's these lows here, 2002, 2003. Those are the lows that we have matched. As you can see when we line them up, these lows here absolutely match these lows. So my sense is that there's logical places that we look for on a technical basis to find support. This is one of them. However, the fundamentals in the market right now are not such that we believe that on a technical basis we have real firm footing to hold these levels, although it is quite possible. In other words, if there is a level that we will find some support, this would be one of those levels that we want to look at. Dollar also on a rampage again. It is trading higher, up almost a full percentage point, 96.89, so call it 97. And as we've talked about with key levels of support as well as resistance in the market, we do believe that support right now is a 61% retracement of this move up here, and that would be about, call it 96, low 96. And so that's where I'm pegging support. Resistance is going to be at 98, 97, 92 to be exact. Lastly, S&Ps, I think that we're going to see a good buy opportunity. We've had what we wanted to see, which is a solid day. My sense, of course, we're looking at the E-mini, and my sense is that we will see this market in terms of a upside move go as high as about 1938, and that's what I'm looking for at a minimum. Now, we're looking at a weekly chart. So when we look at this weekly chart, we're well up a ways from these lows that we hit on a intra-week basis. We had these severe lows that came in, but especially when we have the kind of volatility that we've seen in the market, I tend to disregard these lows. I'll disregard if you have substantial highs, but in this case, these lows, and I look at the real body. In other words, where did the market open at the beginning of the week, and then where did it close? And that range is what's of critical importance, and we're certainly underway and seeing this market move to higher ground. So as I said on Friday, any kind of firmer opening, you can go ahead and enter the market from the long side. Traders who actually entered that market, you're going to want to put your stop below 1860. We've not sent out an official trade alert yet. I wanted to see a couple of days in which we have this market finding solid support and firming up in the market. Upside targets, obviously, I don't believe that 1900 is going to be a difficult target to reach, but I think that we could see this market go as high as about 1940 vis-a-vis the E-mini. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review in trending markets. Bye-bye.